Good afternoon, everybody. Welcome to our webinar series. It's a truism today to say that AI is affecting society, education, and everything else.
Mm.
But as educators, we think it's our responsibility also to showcase the role of AI in different areas that we, have some expertise in. So the purpose of this webinar is essentially to showcase the use of AI in various disciplines, and we've got several speakers in this series who will come and share with you their experiences and use cases in their respective disciplines. The first of those is Indraneel Chakraborty, a friend and colleague of mine. He is a professor in the finance department. Besides being a professor in the finance department, he has his undergrad degree in computer science as well as his master's degree from MIT and his grad degrees in computer science. So we thought who better than Indraneel to give us a sneak peek into the world of AI and how it's changing finance. Indraneel, take it away.
Thank you, Joseph. Thank you, Mitsu. It is very kind of you to invite me to talk on such an exciting topic. Indeed, I would say that this topic is near and dear to my heart. May I share my screen? Is that okay with you, everybody? Mm, I
Yes,
think
you can.
okay, perfect, yeah. So just to quickly point out, as Joseph was saying, and because we have a lot of people from a variety of backgrounds here. So this is my website. You can see it is. So I'm a professor of finance and department chair of finance right now. I have my PhD in finance from Wharton. I did my master's at MIT and my computer science bachelor's from IIT Guwahati. Uh, between uh, between my undergrad and PhD, I worked at Citigroup and Citadel Investments, which are also very heavy in technology. As you all know, that finance is one of the is actually the second largest buyer of computer hardware after NSA. Right? So I mean, so we in finance, you're a big consumer of computer science, and most of my research is on banking topics as well. So one of the things, in fact, I was doing even yesterday was talking to a bunch of executives from a big bank. I'm not going to name the bank right now, but the idea is that we were looking at how AI will change the banking industry for them and how can they quickly change their business model and so on. So the topic of the day today is AI and finance, and I'm going to keep it pretty broad, and I look forward to your questions and thoughts. I'm going to do a few things. First of all, we'll talk about how to think about AI in finance. I remember when I was at MIT, the lab of computer science changed its name to Computer Science and AI Lab, right? So it was essentially around 20 years ago that these changes were happening. And so AI has changed itself a lot in this period of time. So first of all, we'll talk about how to think about AI in finance. We'll talk about what's changing about finance functions. I'll take two cases in particular. I'll talk about investment specific role and a wealth management role, which will touch more of us, even if you are not a finance professional, how wealth management will change and how retail banking will change, and risk governance and regulation, which is a very important part of finance, how they are changing. I will touch in the beginning when we are talking here about how to think about AI in finance, about the labor market impacts and how to adapt. And then we'll quickly talk about a playbook and a roadmap. But this will be a discussion which will be quite finance heavy. I want to take cases rather than talk in generalities. So hopefully the discussion, the Q&A that we will have, will talk about specific things that you may have thought about and I'm not discussing right now. So without further ado, I'll start with framing how to think about AI in finance. And as you all know, that AI is not artificial intelligence. This word itself, and many of my computer science friends, Mitsu, and will agree that this word itself, artificial intelligence, right, has been is questioned sometimes. That what exactly does it mean? What does even intelligence mean? And the idea for even intelligence, very theoretical computer scientists enjoy that discussion and point out that you have to adapt very quickly. So if something has been in a database and you are essentially using the same information again, that's not intelligence at all, right? So you have to solve a new problem that not been solved before. So that's a very high bar, right? A bar which many of us sometimes cannot do. We cannot always solve a new problem faced to us, but that's what we are seeking when we say AI. So that's a very high bar. But right now, let's think of it as a tool which is not one tool, it's a series of tools, and it's a capability stack essentially. And that's how we should think about it. We are not in this discussion. I'm not going to look at it from how to solve specific questions of AI, but how we can apply that knowledge and how that will transform the field of finance, one of the largest consumers, as I said, of computer science. So data are already there, and computer science has essentially completely changed the field of data, essentially how to absorb data, how to look at it. For that, we always had models, but now we have superior models since 1950s as computer science became mature over time, more and more models, bigger models we can do. Applications, the word nowadays is apps. Younger people call it apps. And of course, in AI world, that app word is changing to agents. And then finally, how can we make sure that there's sufficient controls, sufficient safeguards around it, so we do not end up in a situation where AI is used to hack into computers, which is already happening, by the way. So there's a lot of safeguards we need, but there have been two waves, recent waves, predictive machine learning. Essentially, we would like to know if on a series there is a point here, there's a point here, where is the next point? That is prediction, right? In finance, as you can see, I would like to know what would be the inflation rate tomorrow, what would be the stock market return tomorrow, right? Of various securities, what is going to happen in the bond market. This is obviously a very important area. It's also important if you think about Amazon, they would like to know how should they think about consumer demand of a specific good, and that's how they will stack their inventory. So a lot of efficiency can be gained if we have a good sense of the future, which of course is very hard to do in general in the markets. But there are lots of things we can have a sense of. I do know that, okay, we need to hire a few people to next year, and that can help me figure out how much investment must I do, how much loans must I take, and so on. So predictive machine learning has been around for a bit now, and recently, as you all know, that Google, with a very recent paper, started solving a bunch of challenges which could not have been solved from 2015 at least onwards. People were trying to solve, and generative AI essentially came into play as Google and then OpenAI expanded on it, and now we are all seeing a lot of benefit. So that's the general background, which of course affects the whole economy. But with the finance lens, essentially, when we talk about alpha, what do we mean? What is the additional return you can get beyond what everybody can get? How can you improve the efficiency of operations? For example, you want to onboard a customer. How can you do it very efficiently, right? How can you make sure that the whole purchase process, right, of an item is extremely efficient? And how do you control the whole system, right? From operations engineering to financial software, they all have to integrate together to make sure that the firms are very profitable, very efficient in terms of their utilization of resources. So as you can see, a lot of productivity gains are going to happen. So we will talk about that a little bit. The core constraints are we have to worry about whether the model is appropriate to get a sense of prediction and generate additional inferences. So we are really talking about this inference engine. We have some information. Can we solve a new problem? That is something AI is starting to do already. Grok, ChatGPT are starting to solve problems in maths that have not been solved before, right? And so we need to understand if the models are getting it right, if there is a risk. Sometimes we will talk about that a little bit. Explainability, we want to make sure that the models do not become so large, so complex that we have no sense how they are achieving the final result. And of course, ultimately compliance, the laws are not going away. You cannot let these artificial intelligence agents run around and do whatever they want. So I'll whet your appetite by showing you a couple of interesting uh, slides. AI could have a big job impact in the finance industry. I'm showing you from Citi and Bloomberg at the sources here. And you can see that the top industries here are banking, insurance, and capital markets, right? So energy is also there in the middle, but essentially you can think about auto, public sector, communications, and media. But the top industries where we will see a significant portion of automation is banking, is insurance and capital markets, trading, and so on, investments. So these are areas where there's a lot of efficiency that can be gained. Essentially, I was talking to, as I was saying yesterday, a bunch of wealth managers. I pointed out that a lot of roles around them, support roles, etc., will become very efficient, but also there will be a bunch of job losses also there. So, and everybody was in agreement that this is not something they can stop, right? They do not want to stop, but they can benefit. And the whole discussion was about how can we make sure every part of the companies' operations is smooth and efficient. So I'll show you a couple of more pictures, and it's a little bit more detail. Again, the same three industries, banking, insurance, capital markets, are showing up here. You can see that there will be a bunch of lost jobs, which are here. Each dot is a million, right? So a lot of dots are there, right? So basically, and you can see the number of jobs lost will be a little bit larger in this prediction. And this prediction is by World Economic Forum in a report in 2023. And of course, that's already 2 years too late, right? And here they will say that the jobs lost will be a little bit more than the jobs gained, but essentially 40% of working hours across industries can be impacted by large language models. So what is large language models going to do? Essentially, they are going to do natural language processing. Whatever you are able to type, they are going to understand, and then they will spit out information in in a in a manner that you can use directly. So all of this essentially is going to have a significant impact on the economy. Where will the value gains come from with AI? As you can see, there will be a significant portion of labor productivity, which is essentially I can get tasks done faster. I want to book a ticket to Philly. I want, and I can set a bunch of parameters. I do not have to, and I can say within the next 7 days, I would like to buy the ticket, and then I can leave my AI agent to do the job. Something which right now a travel agent does, right? So that is essentially labor productivity. It saves me time. I'm not constantly checking websites to do something which should be easy. Personalization, we were talking about in wealth management in particular. Various clients right now with different levels of understanding of finance are getting the same report. So either you're matching the most sophisticated clients or you're matching the most unsophisticated clients. So we would like clients to get a report that they can understand, that is at their level. That personalization can now be achieved. And all of those kind of things, the quality improvement which will happen because you can, I mean, I was the other day, I was writing a research paper, I set up the model. And it is easy to solve the model with the help of AI. Of course, I checked the algebra, something I was doing before with the help with pen and paper for a while or with the help of my co-authors. Now we can quickly let it solve the algebra and then we can check, right? So those are the additional improvements that you can get. You can also do more. And so a lot of improvements are going to come, and these are in trillions of dollars. And you can see this is just an estimate. And this estimate says about $14 trillion of impact, right? Global GDP impact. And remember, the global GDP is about $100 trillion. So this is a significant impact, 14% improvement. Here, worldwide, right? 58% of GDP gains in 2030 will come from consumption side impacts, right? So there is a lot of information here. Some sources are given as well. And which countries are going to capitalize on this impact? These are countries that you would think of. United States is at the top, which is great. Sweden, of course, is a little bit higher than the United States, but in size of the economy, you are looking at very large economies with a lot of capital because it's going to be a very capital intensive investment process. And you can see right now, for example, the top 7 companies of the United States are investing about 500, $600 billion. That is equal to the defense budget of Europe in 1 year, right? They are investing that much in 1 year, like the defense budget of Europe and 60% of the defense budget of the United States. Just 7 companies in US are doing it. All of that money, all of that investment ultimately will start creating productivity. And as you can see, this is a 35% increase in productivity in the United States on a massive GDP of your. So there is a lot of wealth that is going to get created, a lot of benefits that are going to come. But we have to be part of the solution. We have to transform ourselves with this approach and with AI and use it. So we have to augment ourselves. Humans have to augment ourselves. And so I'll give you 2 examples how, and we'll get into the case studies because we need to understand how we can do this actually, not just talk in generalities, as I said. Um, so the simple mental model we can have is we are going to look at inputs. How can we improve the data that we're using? We have been talking about big data for a while, since 1990s, but not just having data, but how can we use it in a manner that it's a very high quality utilization and a timely utilization? Again, I'll take the example of National Security Agency. They are one of the largest aggregators of data, but agents, intelligence agents who are good at understanding the data are always in short supply for them. So now you can use AI and so on. And many of these companies which are coming up these days are also essentially doing that sometimes with US government, sometimes in general as a private entity. And then we need models for these data, forecasting models, large language models, and optimization models. Ultimately, we are trying to gain insights into the future, and then we would like to optimize our decision making processes and our capital allocation process, right? Ultimately, finance is all about the fact that I could have given that dollar to firm A or firm B. Firm A, and I want to know how much return firm A will produce. Suppose firm A can produce 10% return over the next year, and firm B can produce 8% next year. So this is, of course, forecasting. I have to first forecast this. I will forecast it by collecting a lot of information, including LLMs. And optimization in this world is the economy has, let's say, $100, and all of them I would like to give to firm A. By doing that, I am creating $110 or $10 in the economy the next year. It will be $110 in total, and which is better than creating $8, right, in the economy. And that is how essentially we consider that as the core part of finance, that we are allocating capital to the best use so that we can have the fastest growth. And again, once you have produced $10, the economy has that $10 to allocate between labor and investors. And that's a problem that, that's a separate problem. But the point is, we would like to make sure that whatever money, whatever capital we have leads to maximum returns for the economy in the first place. If you do not do that, you'll have slower growth, lower wages, lower returns for investors, and capital will run away. That is one of the reasons why US is one of the most competitive economies in the world, because everybody likes to invest here because it's one of the most efficient economies of the world, along with Japan and Europe. So actuators, workflows, and decisions. Now we are getting into the little bit of a mental model of how we will use this. We will have input. We will have engines that are models. We will have workflows and decisions. We will make those decisions. We have to come up with this. This is what we were doing again with the bank. How can they think about anytime you're doing a task, you have to think about workflow. Who will do what, and then how, where the information is passed from A to B to C. That workflow is essentially here. And finally, decisions will be made once he gets all the information. It will either choose to go with the project or not choose to go with the project. So that actuator, that whole decision making process will improve. But we want to make sure the decision making process follows policies, keeps a human in the loop, so that we are not off track, right? So we still need, and hopefully we will always need, guardrails around the system. So where does AI create value in finance? It removes friction. This is what I did a whole PhD in. How can we remove capital allocation frictions in the economy? We would like to make sure banks are giving money to the best use of capital, and whenever they see frictions, can we remove that? So document processing, etc., is not what I did a PhD in, but the point is that these are very simple and obvious frictions, right? I was thinking about in my PhD frictions such as when you write a loan contract. Can you write a better loan contract with the company to make sure that um, the company is most incentivized to work um, to pay it back, right? Essentially. So, but here, essentially, document processing takes a lot of time. Yesterday, also, I learned from one of the top banks that know your customer takes time, onboarding takes time. These are frictions, they waste time. There is no reason for us to spend so much time doing paperwork as we do. 3% of United States man hours are spent doing paperwork for taxation. If tax filing and tax compliance can be done faster, it would free us up to do more important things. So, and that's just one type of friction. Elevate decisions. We want to be able to make decisions faster. We want to use all the signals, all the information. We want to consider a variety of scenarios. Is there going to be a recession next year? Is it going to be a lot of growth? Based upon that, I would like to decide whether I want to expand my production of card production or not, or would I sell more vacation hours in my hotels, right? So if I, or should I do it, should I provide a discount on my product because I think that there will be a recession? So all of these personalization, maybe that this individual will buy the item at 85% of the price, and that's better than you not selling the item at all and essentially keeping it at 0%. So how do you know all of that personalization? How do you get that information? You can see Google Ads are already personalized. All the ads you get are personalized to the extent possible, but we would like to do all of this better, faster, and in a manner with more information. Expand capacity. We all know, well, like I like to point out in my class, when I was working at Citibank and Citadel, we would have a desk analyst whose job it is to help a trader figure out new ideas, right? And you will give him an idea, and they will take some time, give her an idea, take some time, and then come back maybe in a day or two. So, but now you have co-pilots, somebody who can work with you, right? I can test the same ideas that took me 2 or 3 days to get information on in 10 minutes. Nowadays, you can do that. As I was taking examples of research drafting, I would like to collect information, and that is what essentially all of these softwares are already doing. People have figured that out. They are using more of ChatGPT, Grok, Gemini, all of this to synthesize information. Before, you had to look at each website separately and try to synthesize it in your head. Now, some of the synthesis is done right in front of you. Code generation. 40% of the code in Microsoft, etc., are written right now with AI because it is a very predictable process. So there is a lot of expansion of capacity. And again, as I said, finance is one of the largest users of code. So all of that is coming there. And all of this will reduce risk because we will find out any anomalies in the system. We will surveil the maybe the assembly lines, and we will make sure that controls where human errors are possible, we have additional controls. Already, all of these things we are doing. We already always aspire to do these things. So with artificial intelligence, we want to do them better, right? And so when not to use AI, this is also very important to know. When you have small data or deterministic rules, simple data, deterministic rules, you do not want a complex model there, right? So do not use the AI when you do not need a complex model. High stakes, low tolerance processes without robust oversight. So something can go really wrong. You got to involve humans, make sure that they are in charge, right? We do not leave, let's say, significant, power control decisions in a nuclear plant to AI. We will not do that. We will, of course, take the augmentation, but we cannot use AI as the main source of control there. If governance, data lineage, or red team testing are missing, we have to make sure that all these tests are performed so that we can not end up in a situation that the guardrails are not there. I keep talking about guardrails because essentially programs are only as effective as all the conditions they have involved. So if there are in real life, we'd like to call it in finance incomplete contracts. We know you can go to point A, from point zero, you can go to point A, point B, but the programmer forgot to write what happens if case C happens. So then at that point, AI will not be able to work always because it does not know what to do in such a situation. So all of that testing, that robustness is still coming into play because we are quickly deploying a lot of processes and models. So I'm going to take a couple of examples. I will give you all the details, and the slides I'm sure will be available to you. And this is getting recorded anyway. But I'll take two examples. I'll take the example of, let me just point out the example, a front office example, and then a wealth management example. So let's point out what is happening here. Generative versus predictive. We understand the predictive ML is there to what will happen, probability of default of your borrowers, loss given default. If default happens in a bond, if you have lent money out, banks will always care about, well, if I've given you a mortgage, what is the probability of defaulting on it? If they can figure it out better, of course, you will get a better interest rate. And loss given default, if you are going to find that your loss in case of default is low, then again, you'll get a better interest rate. Value at risk. If they don't face a lot of value at risk, then the system is more stable. We do not have the kind of financial crises we had in 2008. We want to avoid those kind of things. And of course, alpha, we would like to know what kind of additional return can I make beyond risk, which is the investments idea there. Generative AI, of course, is different. These are questions, summaries. What does this actually mean? You have a bunch of data points. You want to aggregate them, synthesize them, and how to act. These are where agents will help you. Essentially, these are essentially applications, superior applications, and how can they act? They will act on your behalf in limited in an environment that you control. Right? Say in this controlled environment, you will respond. You are not a human being. You're not going to respond openly. You're not going to start buying me hundreds of tickets. You'll buy me one ticket to Philly uh, from Miami, let's say, which will be on this day within this price. So you will have to give that guardrail. So when we have this forecasting and reasoning, we end up with action workflows. That's important. And so AI applications in financial services, robo advice, essentially, it brings down the price of financial advice for everybody, which is great because we need a lot of people to help out to increase financial literacy. And we just do not have enough people who are willing to do it at the prices that we would like to do it at. So we need the help of artificial intelligence, which do not have to pay for rent and so on. Customer recommendations, right? We would like to know among the variety of products we enjoy, the large variety of products, but we would like to make sure that customers get the recommendations which are appropriate for them, right? And we would like to make sure that fraud detection and chatbots, etc., are there for natural language processing. And of course, algo trading is very exciting and interesting because the idea is how much of the, and already it is the case for equity trading, most of the trading nowadays in equity markets is done through algorithms. And only for high stakes, low data world, as I was mentioning before, bond markets, we see um, that we have bond investors, right? Bond traders. So let's take a couple of examples, and this will also help us clarify the scope and what can we do with AI. This is exactly these examples are also, as I said, very useful for any company. So these are the kind of things we actually teach in executive education to a bunch of industry leaders. We would like to tell them, if in this case, finance executives, that what kind of what kind of benefits can happen to your company, what kind of transformation can you do. So research, trading, and risk management. The front office essentially means investments positions in hedge funds, in banks, right? So a front office job where you are looking at public markets, you're investing in equity markets, debt markets, which are public, right? Means the data are available to everybody. You essentially would like to look at, let's say, alternative data. Everybody's looking at stock prices, bond prices. Everybody's looking at inflation. Everybody's looking at interest rates. But we would like to get alternative data, right? The idea is we would like to read newspapers. We would like to read all the financial statements. We would love to know whenever the CEO of the company is doing any meeting with any other CEO. All of that is natural language processing on filings, calls. Whenever these companies do SEC filings, whenever they are on a phone call with analysts, we would like to do all of that work, and that's called signal research, right? And it's already done. It's going to be done faster, and you would spend less money doing it. And that's the promise of AI in this front office. The first promise. The second promise, as you can see, is portfolio construction. We would like to form a portfolio. How much stocks should I have? How much bonds should I have? Within stocks, would I want to invest in United States? Do I want to invest ex-US, outside United States? Within outside United States, we want to go to developed markets, developing markets, right? Developing markets, right? We can do all of that within bonds. Do we want to go to TIPS, Treasury, inflation protected securities? We want to go to fixed income securities. Within fixed income, we can say corporate bonds, munis, right? So a lot of choices are there, and this portfolio construction approach is all about we would like to model how much risk we are taking in a variety of scenarios. And then we would like to make sure that we are not going to fall off a cliff or there's no bankruptcy and so on. In fact, FDIC, Federal Deposit Insurance Corporation, does these stress tests on banks after 2008. And those kind of scenario stressors, they keep expanding the set of things. Suppose unemployment goes to 6%. Suppose interest rates shoot up to 7%. What would happen to your bank? That is all. These are all the scenarios you have to test to make sure that your retirement is not going to fall off a cliff. Nowadays, only very advanced investors do that, but we would like to make sure that these are available to everyone at a low cost. And again, execution, algorithm selection, venue routing, through which exchange you'll go do that, optimization of costs, right? All of this you will have to take into account. And Gen AI will give you assistance also. They will help you in idea generation. Again, it's not that they're going to give you a specific idea. They will suggest ideas, but again, and that has been happening always. Research analysts provide ideas that people anyway fine tune, change, and so you can look at their ideas. Gen AI agents can also code. They can also backtest. What does that mean? They can essentially look at what would have happened had you made this decision in the past. Hmm? And so all of those things are in the front office. And so I'll be quick here. I do not want to bore you with all the precise details, but I'll give you an example. Public market investing with AI, long short equity desk means should you, let's say, within an industry, do you want to buy Coke and would you want like to sell Pepsi as a company? So and that's there to generate alpha, right? And so that is what a hedge fund tries to do, which tries to figure out which companies to invest in, which companies to short. And this long short trading strategy is quite common. And this is a major source of alpha generation for stock pickers. So we can see here a 10 to 20 billion asset under management equity long short desk. And this is an example I'm pointing out is a case, right? So a repeatable pre-earnings edge. They want to look at companies and decide very quickly with research coverage without adding headcount. They don't want to add new people. They want to look at what can we do with AI. They will do natural language processing and filings and calls. Every company has to file 10Ks and 10Qs and do earnings calls to explain what do they think will happen over the next 6 months, what happened over 3 months, what happened in the last 3 months. And you can get additional information than what the numbers are. You can get the tone. You can get the guiding or softening cues about the economy. You need to know performance measurements, mentions at paragraph level, embedding different topics. You can use additional data, such as if you're looking at Walmart or Target, weekly foot traffic data, those are available. Card spend panels, consumers, what kind of consumers in which area are spending money on what? You can use all that data to try to figure out what would be the profit margin of different companies. Simply debiasing, you're going to look at whether in Christmas time there is a higher return, that higher sales doesn't mean there will be more sales in March. And all of those things you're going to do. And finally, you're going to take machine learning techniques. You are going to do, let's say, in this case, gradient boosted trees to try to get revenue surprises before the company announces. Can you anticipate the changes the company is going to announce, the big surprise? Because that would have a big effect on the stock, right? And so if you do such things, if you have such prediction, then you can do risk aware sizing, means machine learning risk models. You can actually have a sense of, well, what are the fundamental factors in the company, what kind of risks they are going to face. You can look at aggregate economic factors such as, and we call them macroeconomic factors, macro betas, rates, USD, oil. And we are going to use the rolling elastic net approach to make those kind of predictions. That's just one of the techniques. Enforce scenario loss caps. We do not want to take too much risk. We will make sure that there is a risk adjusted return is what we are trying to maximize. And then in the markets, this is always going on, something called value weighted average price, VWAP. But now we can do it better. We can use pre-trade cost model to set how we are going to, if I have an idea, I'm going to buy more shares of ExxonMobil, how should I go about doing it? Should I dump all the orders suddenly? If I do that, there will be a very large price of those shares in the market, right? So suddenly we will see that I have created a lot of price impact. So you'll be more smart about it. In-flight algo switches, you'll switch from one algorithm to another algorithm, and then you will route through the place, which will lead to the cheapest transaction cost analysis. And Gen AI essentially can also help you with research, retrieval of first assistance that drafts one pages with citations, scaffolds, backtests, auto logs, experiments, all of that assistant support, right? Essentially, the whole idea is to provide you PhD level of research assistance, right? And these kind of, as you can see, we do not have enough PhDs. They are not going to come and work for you for at the price of $20 per month. So, or maybe $200 per month for an enterprise, right? So the idea is that level of support would enhance all our quality of execution in a variety of ways. So again, when you're implementing this, these are what we want to do. This is AI approach. And then finally, I'm going to be quick about this. You, in the workflow, you will assign daily refresh names with strongest surprise, highest confidence building in an idea queue, which will generate ideas in the morning. Portfolio managers will review the ideas, Copilot one pager, risk constraint fit orders, risk by forecast interval range. You are going to basically see what kind of order you're going to put. So first you'll get an idea, the portfolio manager will review, decide what to do. He will fine tune that. He will decide on and then he will execute the orders or send the orders to the market to be executed with another AI agent. And then based upon market feedback, you will restart the process, right? So that is the workflow. Essentially, there's a continuous interaction between the human user and the agents. There'll be a bunch of agents. What can this deliver? It can improve the information coefficient against the baseline. And in this particular example that I'm quoting without the name of the company, the top minus bottom decile percentage return, right, can be quite large. You can get essentially about 200 to 400 basis points additional gross alpha. That is what they were generating in the beginning. But of course, some of that will disappear because as other companies will come and also generate AI. And after taking into account costs, they are making 1% to 3% more per year after taking everything into account. And execution, as you can see, whenever they want to execute something, they are very fast. They are not losing. They are reducing the amount of execution shortfall. Means you wanted to execute, but you didn't get the chance. All of that declines. And research productivity, you can cover more companies and try out new ideas faster. And you are also ensuring that the risk is limited. Lower unintended factor drift means essentially you are not taking risks you do not want to take. You are taking the exact amount of risk you want to take on each factor, risk factors as we call them. Scenario value at risk breaches fall as pre-trade stressors, gate sizing. So we want to make sure that the amount of risk you are taking is also limited. So again, all of these guardrails are also important. Will be better ultimately. The kind of regulators should be very happy with these kind of changes because right now the regulators are worried that what if a scenario that we have not considered happens and banks are not able to respond and we have a financial crisis like the ones that we had before. So those are the kind of concerns in hedge funds, in investment banks, etc. Now, if you think about retail, and of course, another very important part of finance. So we have a lot of hedge funds in investment banks, etc. We also have a lot of wealth management and retail finance, uh, companies here in Miami and all over the country, of course, and they handle huge amounts of assets in about $150 trillion worth of assets in United States alone. So wealth management and retail finance, what can AI do there? Personalized advice under constraints. We would like to make sure people don't get cookie cutter advice. Joseph and I do not always have the same preferences. We may have different plans for our future, different retirement plans, so on. Mitsu and I may also have different plans. So most of the time, most of the companies, unfortunately, are giving cookie cutter advice, right? And that's because it's very hard to customize at a reasonable price. So if you are a very high net worth client, you get very good advice, but otherwise, nobody has, unfortunately, the time, which in some sense is a good thing in the sense that financial advice is so costly, right? That right now you're not getting it, but in the future you will get it because the cost will come down. So next best action engines. How can you save? How can you rebalance? How can you tax loss harvest? Basically, you're selling your loss makers to buy other companies, so reduce your taxes. All of this client communication, hyper personalized but compliant content, and you can have advisors basically can talk with the clients along with taking meeting notes, customer relationship management, auto updates, all of that can be done with AI. So all of this, and of course, this is going to happen in other places. You go to a doctor, you talk to the doctor many times, and you go to multiple doctors in the case of medical field, right? And you talk to them about various problems. But all of that problem, if you are willing to share with all of the doctors, and then AI can synthesize and share with the doctor that these are the problems he's facing, do not give him this drug. If you give, and they try to upload a prescription by mistake, sometimes it happens, they do not know the full background. So all of that can be avoided if we have a full AI agent representing us essentially and working with us, with our doctor and their agents to make sure that mistakes don't happen, right? So here, the same thing, we would like to make sure that the customer relationship management is done properly. And the goal is ultimately to give personalized, compliant advice at scale, which is what we are not doing so far. While lifting advisor productivity, advisors will also make more money. They will be able to handle more clients. In this case, there's a case study example. I've changed the name, Harbor Wealth, and they are handling about $15 billion assets under management. They have 140 advisors, a lot of accounts. Average account size is about 680K, 40% in taxable, some in retirement. But the data are fragmented. Custodians have some information. You talk to your advisor, they have some information. Some of the others are in the relationship management software. Reviews are manual, and the outreach is inconsistent. Some of it is on WhatsApp, some of it is on text message, some of it is on email. All of that has to be combined together. That is exactly what I was talking yesterday with, as I said, with the bankers. They themselves find these problems. Rebalancing quarterly, we would like to make sure the all of these tax loss harvesting that is required happens, and we must make sure that the SEC regulations of best interest are complied with. Right? An AI approach, in this case, personalized advice under constraints and suitability. The approach is to provide a client policy model per household, looks at the target, limits, restricts. If they have restrictions, they want to do ESG. You want to make sure the tax lots are right, which means you do not sell shares in the lots which have gained a lot, because that will, if you want to make sure your capital gains taxes are lower, right? You wash sale windows, which is an IRS rule, employer stock rules, lots and lots of rules exist that all need to be complied with, right? You need liquidity, you want to pay for your child's education. Where is the best place to get the money from? You do not want to sell very highly appreciated security. You will pay a lot of capital gains, which, and then you may have some money coming from your parents or your grandparents, which have mandates on the accounts. So all of that has to be combined together, and you should be able to be given an advice. Where is the next best dollar you should get from? Which investment should you liquidate? Which ones you should not touch? Across all sorts of accounts, from your retirement account to your Roth account to your in-person account, all of a taxable account. And again, we need a best interest gate. Every recommendation has to be checked that this benefit, what is the alternatives? Is that the best thing for the client? How would this help the bank? Not only is it good for the client, many times clients sue banks saying that you did not do the right due diligence. And then all of this documentation, all of this AI support would be very handy. So it will reduce frictions in the economy in a variety of ways. And then the optimizer here is multi-account view, integrated program minimizes tracking error. Everything will be in one place, right, which will help us out. And as you can see, many of these approaches have already been taken. Apple Health or any other health platform is trying to do that. You can see for companies, they have Oracle produces software, OpenAI is producing software, so you can manage all the relationship of the clients in the same place. So we will see a lot of integration. We'll see a one-point interaction, which will be efficient over time. And so next best engine, in this case, will continue this point. As you can see, it's very similar. This example is similar in this particular portion, that also, even for individual clients, you need to get signals. When do you get new money? What is the vesting event? Harvestable losses, required minimum distributions, goal slippages, saving gaps. All of them have to be taken into account. And then the actions that have to be taken is how can you can tell the client, if you are the wealth manager, you have to increase your 401k deferral by 2% to stay on plan because the market has not done well and you need more money. You can open an HSA account. You should automate this much money. All of these advices right now are given in an ad hoc manner without full information by individuals who are doing the best they can, but they essentially have only pieces of the mosaic. Right? All of that over time will be combined. Tax loss harvesting. Where should you sell your shares? Right? To maintain, you want to maintain exposure without minimizing, while minimizing capital gains taxes. And so the households will be able to make sure that they are getting what they need. They need to, based upon you will be looking at the specific household which has more urgency. You need to make sure that your strategy is suitable for them and you are doing the best impact. All of that, and the advisor has the capacity. So all of that will be matched, and so we will be able to give the best advisor to the best client. And again, this is all about efficiency. We are again using in this case not just capital in the previous example, but in this case human resources most efficiently. And so, what would be the benefits of such a strategy? Why are we doing all of this? What would be the tangible benefit? The tangible benefits will be an improvement in return for the investor. In this case, the wealth in your retirement account, you will get that benefit, or in your taxable account. The house is on track. Most houses are able to save about 18 percentage point. They are on track more often, right? So before, on track was, let's say, 50%. Now it's going to be 68%. Time savings. Advisors preparation time is reduced. So they basically, before they meet the client, their preparation for the meeting comes down. Again, for doctors, same thing. Again, for lawyers, the same thing. So this will help a lot of high skilled individuals all over the economy. And you can imagine, again, I'm going to take the example beyond finance also, in medical care. If the doctors had less paperwork to do because they spend a lot of time doing paperwork, that would really free up a lot of doctors' time to see patients, to interact with patients. And of course, with all of this, you can be more proactive. You can meet your clients more because your time will be freed up if you're a wealth manager. And 2.4 times in this case, a stable compliance review time. Essentially, you're more often in compliance, which is great. And your risk is also limited, right? You're leaving the risk band less often, right? So ultimately, those are two cases I took. And the purpose of these two cases is to show how AI will work. It is not that I didn't want to just say AI will do this, AI will do that. I wanted to show you piece by piece. And in this particular example, for example, you can see there are many, many different AI agents which will come into play, which will solve isolated problems. One will just model client policy. One will look at suitability. One will look at optimization. And you want to create those things separately. You should focus on them. Then they will work together, right? So as you can see, and then the signals will be generated. The actions will be coming from a separate place. And the prioritization, who should meet whom, right? Whose phone call, where should you make the next phone call? All of that are separate agents, and they are all applications of AI for one task, which is ultimately that you want to deliver superior value for the client. And that's how productivity is increased. And we talked about the positives of this. Is also will have an impact on labor force and education, right? Um, Before I go into that, even I would like to point out that, of course, why are we doing this lecture series? Because we are, interested educators who want to make sure that our labor force is ready for this transition. We want to make sure that companies in the United States are more efficient. We want to make sure that people who are our students or people in Miami and the broader United States and the world who work with us are ready for this transition, right? And so that's our goal here. And so, impact on the labor force, of course, we understand that AI will automate tasks, but not whole jobs. That's something very important to understand. It will not be able to take, that's why I was talking about AI agents doing specific tasks, which is great because those tasks which are repetitive and low return tasks, nobody has become, nobody has been promoted because they are very good at bureaucracy, right? No doctor is a great doctor because he's good at paperwork. No financial advisor is great because he fills the right forms in the right order, right? So these tasks, when they get automated, they free up time for us to do higher objective tasks, right? High judgment roles and tool augmented operators will grow. So there will be barbell approach that we will be able to do high skill work, higher skill work, which cannot be automated. And the low skill things will be taken by AI, right? And so that's a good thing because this will be AI human combination that we are going for. And if you're in the middle, you are not able to be in the high skill, and you are kind of towards the low skill area, then that's a problem. So what does that mean? You have to improve your skill. You have to be that human who can augment his efforts with AI. And this is a very common trend in and this was before even AI showed up. Just because of automation, we could see even if you are looking among accountants, you will see that the 90th percent accountants' wages are growing, and the 10th percentile accountants' wages are declining. Right? And so that's so within industry we are seeing that they're more skilled who are augmenting themselves with information. Even Google, as you can see, not everybody uses Google properly. They are not using it for research and all of that. They should. Maybe they are looking at cartoons. So how you use these tools will help you out and augment yourself. But if you are looking at cartoons, it will just waste your time. Right? So that is exactly what we'll see. We'll see productivity dispersion. Top quartile pulls ahead. We will see that the top quintile, top decile people will do better. And new roles will come, AI product owners, right? So somebody will be doing all the companies will generate themselves, whose job is to do more paperwork about filling forms, right? They will be very good at, let's say, doing reimbursement forms. There'll be other companies or other roles where you will look at the model generated by AI and validate that. Those kind of roles already exist, which is quality assurance. That is essentially what you need. Prompt tool engineer, you are essentially, maybe there'll be less coders because the job of coding in a specific language may decline. But you have to work with AI, essentially provided the same information that a coder would have done with a long task. Now you have to give it domain specific information. I do not have to say A is equal to 10 and then B is equal to A plus 5. I do not have to write those lines of code. I can say, what if I add 10 and 5, right? And again, I'm taking a very simple example. That's what you can do with calculator. But now I can talk to Grok or ChatGPT and ask, well, I have these tax accounts and I have these retirement accounts. I have these Roth accounts. I am planning to retire in 25 years. How much money should I save so that I have enough money after taking into account Social Security? As you can see, before it would require me to get a personal financial advisor, but because I'm still asking a very specific question, it's specific, but it's in English. But it's specific. It doesn't mean just because it's in English, it's not good, and that's why in computer science people like to write pseudocode. It's essentially you're writing pseudocode now in English. And so prompt tool engineers are essentially pseudocode writers in English, I would think. And so those are new roles that are generating. You are not writing one line codes. You can write a full page of very detailed instructions for getting the information you're getting. So these roles will be most effective in finance, research analysts, associates, junior bankers, operations analysts, compliance reviewers. All of these will be affected. Doesn't mean they will disappear. Software and data engineering shifts to integration governance. All of them will be augmented. So, and this will be good for people who are highly skilled in these professions. They will make more money. They'll be more in demand. But that's what is needed. And that's essentially the playbook for workers. They have to augment themselves with all of this information. They will work with AI. And then slowly they will automate the lower level tasks. And every year I work with finance industry executives and I see that they are constantly learning and moving forward, right? That's what has to happen more and more. More and more automation will happen and you'll move further and further. You have to constantly increase your skill. As AI and that human connection, as AI will move this way, you will have to move further out as well. Specialize, you have to specialize because that's the kind of information AI will not have. You can ask ChatGPT or Grok, you will see that they will make mistakes when they're talking about specialized information. They're trying their best, but you are going to be the domain experts. Will with the data, you'll come to the right decision. And you have to quantify the impact, right? That's what workers will have to do. Employees have to do track saved hours, error reduction, and you have to invest in all these skills. You have to look at the latest language. You have to look at data wrangling. How can you organize your data? You have to look at retrieval augmented generation, prompt retrieval. and basics of model risk management. These are the kind of new roles that are coming up, and this is great because we already can see there's fierce competition between companies to get enough people to do AI work, right? So, and so what does that mean for universities like us? As we can see, Mitsu is a computer scientist, and Joseph is in the business school. They are working together. They invited me. I would point out that Mitsu is also sorry, and I have chatted before about engagement. Joseph and Mitsu work in general together. Joseph is also the director of AI for Miami Herbert Business School, right? So and we have classes in business technology, in marketing, in finance, right? In management science, on AI and how it connects together. We are even creating programs in marketing analytics, which is working between marketing and management science. Of course, in computer science, there are lots of programs. I look forward to working with the computer science department with finance. We already work on a few things. And the idea is we would like to make sure that all our students, all the labor force of the world are fluent in AI. And this is a term we must be used to. AI fluency, not just that you can go to ChatGPT to write something. You have to be fluent. You have to really use this, right? We do not use typewriters anymore. And there was a time when nobody could type, perhaps very few people could type. Now everybody can type on their computers, right? And so that kind of fluency has to come. I had to learn typing in undergrad because I did not know typing and I was in computer science. So I had to go and take a typing class. So similarly, now people have to become AI fluent. Provide specialized knowledge. We have to make sure that you have such strong domain knowledge that you are irreplaceable in your field. And then you know exactly what data are useful. Again, understanding data, dealing with data is also an art and a science because you have to really understand, and this is the whole IDSC's approach. They are looking at a lot of data, they have a lot of computing power. And that's where an econometrician comes into play. You have to know what to do with which data and what not to do with which data, right? And it is our job of universities to help students and workers invest in the skills, and we will keep doing it. We are doing it in a very we are doing it in earnest at University of Miami, and I look forward to working with everybody. Uh, you know, all the people at university. We are even working with the city of Miami about how can we attract more companies and how can we provide them an environment. We have conferences. We do a lot of initiatives to be a very strong and responsible and contributive player to the city of Miami and in general to Florida and United States and the world. All right, so I'll thank you for your time and attention. This is my name and email address. I'll stop here for Joseph.
Thanks a lot. Thanks a lot, Indraneel. I got to know about my retirement. He helped me with that. He also told me that I can go to Google and get cartoons done. I didn't know this. I think you really helped in many dimensions, is what I said. Okay. And thanks a lot for a shout out on our role here. And with the passion, I think Indraneel, me, and Mitsu, and really care about we as educators being at the forefront of this revolution and the technological revolution, and trying to propagate as much as possible to people like the rest of the world how to use AI. Thank you so much, Indri. That's wonderful. We're going to open up the floor now to questions. So if you all can raise your hand or chat, we'll sort of monitor it. So I've got the first question and I'll just read it out. Let me see. Okay, here we go. Indri, if someone did not have experience in using AI to solve one of the AI problems you mentioned, where would they start? Are there online tools you would recommend?
Yeah, so I mean, if of course, none of let's start there. That 20 years ago, there was not a lot of people who had AI experience. So anybody you are talking to today got the experience by engaging themselves, right? I mean, I did not grow up in a world with AI fluency, right? I mean, Joseph did not grow up in that world either. So it is normal for you to feel that you do not have that fluency right now. So I'll just point that out first. The technology is changing, and there are like maybe five people who, I mean, those who are changing it also are falling behind. So it is a very normal feeling to have that I do not have experience because nobody does, right? Who had experience with the iPhone before we were using it because it was not there. But now, I mean, in fact, I used to think that my thumbs are too big and I will not be able to type on the iPhone, right? So, I mean, so, so to solve one of the AI problems that I mentioned, I would say that yes, I mean, I think there are lots of courses you can take in a in various universities. And of course, we do that. We have certificates in AI, and you can pick up a book. You can read. These days, courses are also online, offered online. I would say that try to and lots of free stuff also. I'm not saying that you have to work with University of Miami also, but lots and lots of information. I think what has also been revolutionized over the last 20 years is how easily accessible information is. MIT used to provide open courseware when I was just there in 2004 and 3. So they were providing some information. It was not very, it was well curated, but more information had to be done. So I will say it will take time, to your point, right? I mean, I'm not going to say that there is a panacea, you are going to suddenly be able to do all of this, but I will say you start reading a little, you take some classes, you read some books, you look at YouTube videos, but at the same time, people are picking it up quite fast. You can have your own ChatGPT subscription or Grok subscription and make agentic tools pretty quickly in a day. I was started basically what I will tell you this 20 years ago, what took me 3 days to do because I just asked somebody to do that on a desk analyst, got me 10 minutes to do. And I also learned. I spent about 3 or 4 days to get to that prompt engineering level, which basically I and the ChatGPT could have that conversation very precisely about what do I want to get in terms of distributions, payoffs, returns, and all of that. So I think to answer your question, the standard resources of going to the university, reading a book, going to YouTube, reading free material would be the starting point. However, it does require a lot of motivation. You should not have a defeatist attitude that things have changed, right? So I'm not going to move forward anymore. I'm just going to be where I was. I will keep using that. If you have that attitude, then you are asking to be left behind, right? And again, as this transformation is happening in your company, there'll be a lot of other people who will be going through the same thing. Many tools you will not actually implement. You will use them, right? But you have to be aware of them. You have to talk to people that, okay, what about my mail automation? Can you help me with that? That's what I was telling the bankers. They don't have to do it. They can work with somebody, but they have to be aware that those are the system architecture changes that should happen. They should talk about the fact that they want a superior statement, right? Customer statement, which is matching that. So some of this is about working in the organization in an agile manner, and it's not about you having to do everything yourself.
Thanks, Indraneel. I'm on to the next one. With all the talk of model hallucinations, how can someone be confident that they can trust the results an AI-based tool will provide?
Yes, as you know, garbage in, garbage out, right? So we have fed a lot of information to AI, which is not correct, and they are, as we know, that ultimately inside the model they are making connections between correlations between two facts, and so that's why sometimes wrong connections are getting made. And that is very good in some sense for you, as you said. Model hallucinations means that your domain knowledge is very specific. I was also touching on that. I was pointing out that very careful domain knowledge cannot be beaten by AI, right? So you need that person who can talk to AI at a very deep level. And I have seen that already. I had to tell AI a couple of times. It said the exemption limit for 401k contribution is this much this year. I said no, recheck because that is not the right limit. And it said, yeah, I'm sorry, you are right. So it did a deeper search. So you are right that. So my answer to you is that you have to think about domain knowledge specificity. It is essentially a tool, but if you become more and more expert, you will not trust the results of AI. You will have to verify them. Right? That is your job.
All right. Thanks, Indraneel. The
Mhm.
next one is from Justin. Can you read the questions or should I read them
Yeah,
out?
I can read it. I'm
Okay, go
planning
for it.
to
No, I can read
retire.
it for you so that everyone can
No.
hear.
Okay, whatever you prefer.
So, so Justin says, "Yeah, I'm planning to retire in a few years and I've been playing around with Grok to help me figure out my savings goals. Would you trust it? Are there ways to test it?
Yeah.
Try Claude, ChatGPT, or see if same set of prompts provide the same results."
So as you can see, I have also tried Grok. It directly says that it's not a financial advisor. It says that do not trust it, right? I mean, the fact is, however, Justin, to your point, it does give you the full picture how it came to the calculation. And this goes back to the previous question. We cannot outsource intelligence, right? This is going to be our RA. We must recognize that, not our leader. We cannot become its RA, right? So you're right. You should look at the calculations and verify them all. And that will be very important for you because one of the things, at least in finance, I will say, and people have said this to me and I have pushed back, I had a student who said to me, "Well, I do not want to know all the finance for my retirement account." I said, "Well, in that case, your retirement advisor will be richer than you, right? You do not want to be in that world. Money is everybody's concern. Your money is your concern. You cannot outsource that job, right? It is not like a musician. I cannot sing, but I have to have my own retirement." So, to your what is the great thing that could happen, Justin, is that when you ask any of these software, they will give you the answer, but they give you an extremely detailed explanation, which you generally cannot get from financial advisors right now. And I hope that you will take the time, because it is your retirement. You're talking about your own life and your family's life, that you will go through the calculations yourself. Question it, which is what I do. I say, this is the assumption, this is not correct. For example, I asked that question to it. I said 40% in, taxable, 60% in retirement. If you have this calculation, what is the tax drag? It will calculate tax drag, but it will not calculate the right tax drag for you if you do not tell it that you are in Florida. So it will say that I am going to assume that you are in New York and I'm going to calculate the tax drag. Then you have to correct it. You say, but I am in Florida. I do not have that tax drag. So, Justin, so I hope that it will be an interactive, iterative process. It will not be a one shot question. Start with simple questions, improve on it. You will learn from it. You will see its assumptions, question it. And that's exactly good prompt engineering and domain knowledge is. You are all getting to the right question here. You must have more domain knowledge, and you have to be willing to analyze the answers given to you. You're talking to a person who is smart, or person or chat AI agent, but that AI agent has no obligation to read your mind. I mean, so you have to be able to read its assumptions and say, okay, this assumption is appropriate, this is not, and so on. That's what
Great,
I'll say.
thank you. At what point will users of AI become so reliant on the results of AI that they stop double checking the validity of the outputs? Is this a cause for concern?
That is a massive concern. I think that is the thing that we must avoid. I think we all can agree that essentially the day that I can be completely substituted with AI, that all I do is what my AI tells me, then you don't need me, right? For sure, right? We must know that, right? If all I can do is just do calculations, and they have said that to undergrad students as well. When I show them a financial statement, I say, if you are going to decide based upon the numbers in this financial statement, right? Then why do I need you? Your job, as you know, is as in McKinsey will like to say that 95% of the time you're making decisions with uncertain in an uncertain environment with incomplete information. That is our value added. That is the value we are adding as human beings in decision making authorities, and that is the value AI cannot add, because it is going to give you probabilities and you have to make the final decision. So you are right. If somebody chooses to outsource their thinking, if they are going to use ChatGPT to write the whole mail and not read it, that person over time will lose their job. They should lose their job, right? I have to say that, because what is the purpose? Yeah, I can communicate with ChatGPT. So, I do not need an human to copy paste that, right? I mean, so it is to be augment, to improve, and you have to keep moving your skill set higher. So I agree with you. That is a concern. And unfortunately, some people will fall into that trap. But I hope that, and the same thing as Joseph and I were talking about the Google trap, right? You can use internet to just waste time, or you can use internet to learn a lot, right? So both will happen. So,
Okay, I think we are done with the questions. Okay, give it a minute or two. Any more questions from the audience? Okay, so if not, I would like to thank Indraneel again. He was our inaugural speaker. And so thank you so much, Indraneel, for sharing your time and your knowledge in both finance and in AI. It was a pleasure for me, and I'm sure everyone has enjoyed it.
I,
Please reach out to Indraneel if you have specific questions on AI and finance, or AI and or finance, and you can be sure that he will give you the best possible answer.
Mm. I just want to point out for everybody's benefit that the IDSC page is here where all the seminars will happen. And, Eve just shared it to with us. And as you can see, Joseph himself will be speaking soon, right? And that would be a very good chat. And of course, there are others who are coming in. Tom Collins is next, and Ronaldo after Joseph. And there's a whole series. So I just wanted to plug in for Joseph also because he's too humble to do it himself. Right?
Thanks, Indraneel. Thanks. All right. I wish you all a very good afternoon, and hopefully you'll all have a great weekend too. We'll see you at the next webinar. Thanks. Oh, I forgot to thank Eve and Jacqueline. Without them, we wouldn't have this, right? They're the ones who, behind the scenes, has got everything together. Mitsu, thanks to you
Thank
for
you.
Thank
actually
you. Yeah, it was a very
seeding the idea.
enjoyable seminar. I learned a lot.
Ah, you're too kind.
Okay.
Mithu. Thank you, Jacqueline. Thank you, Eve. Thank you, Miss
Bye, everyone.
Joseph.
My pleasure.
Bye.